Thank you so much, Aya. Good evening. Good morning, everyone. I guess all that constitution amendment or new constitution information right there just got back to me. Good morning. Welcome to Business Morning on Sunrise Daily. We heard, as usual, from the global space, telling you that oil prices edged lower on Wednesday. A stronger dollar curbed investor appetite, while traders took some money off the table after benchmarks rallied to multi-month highs in the previous session. Let's look at the numbers right there. It's a drop for Brent, 0.2% down, now at $87.22 a barrel. WTI also down 0.4, much deeper. But we see that the gap between Brent and WTI seems to be closing out. I wonder how that will look like. I haven't seen that in a while. So $83.16 a barrel after I dropped 0.4%. We look at the factors driving this drop in Russian refining capacity as a result of those attacks from Ukraine striking its oil facilities. That's in Russia, and Russia says that oil exports from its western ports will increase by almost 260,000 barrels per day in March over an initial month plan of 2.22 million barrels per day. Still in the global space now, we head to the grains area and see that Chicago soybean futures edge high on Wednesday as unwinding of short positions by traders supported the market, while wheat firmed on worries over supplies from the Black Sea region. Looking at the number, wheat gained 0.1% to $5.05 for a bushel right there. That just changed right before me, for a quarter of a bushel. That's for wheat. Looking at other crops, we see there you have corn. Corn dropped 0.1% to $4.39 for a quarter of a bushel. And also, soybean market is being supported by short covering ahead of the U.S. March 28 prospective plantings and a quarterly stocks report. Overall, strong crop prospects in South America are limiting the upside potential. Limiting Brazil, they also have a contribution to this. Brazil's soybean harvest reached 63% of the planted area as of last week, Thursday. Those attacks are also contributing and pushing prices. Russian attacks on Ukrainian agriculture facility, that's causing worries about disruption of massive grain export. But in total, we see that commodity funds are still the net buyers of CBOT wheat, corn, and soybean futures contract as at Tuesday, and net buyers of soybean and soy oil futures. Let's come to Nigeria. Another win. It's the Women's Month, and we're still celebrating ourselves, I believe, because the financial institution, one of the top, those figures, Zen Bank, has appointed Dr. Adaora Umeoji as its new group managing director and chief executive officer designate, the first female CEO since the bank's inception. Well, I say congratulations to us, ladies. Her designation takes effect from the 1st of June. And in a statement released on the Nigerian Exchange Limited's website, the bank's group board says that the appointment follows the expiration of the current GMD, Dr. Ebenezer Onyagu, expires on May the 31st this year. Before her latest appointment, Dr. Umeoji was the deputy managing director of Zen Bank with nearly 30 years of banking experience. And to a matter close to our hearts right here in Nigeria, the naira for a second consecutive day has recorded a gain against the USD. Little wins, but we celebrate. So on NAFEM, we saw that the naira gained 0.78%, opened at 1,572 naira 86 kobo at the opening of Tuesday's trade, closed at 1,560 naira 57 kobo while on NAFEX it closed at 1,583 naira 54 kobo, opened at 1,597 naira 34 kobo, gained 0.86%. Little means, but I mean, if we can see a reduction in the numbers here, I think it will give Nigerians a bit of comfort, give our purchasing power a bit of comfort, I must add, more importantly. So let's see how it will trade today. Hopefully we'll see a little bit more gains, and that will obviously be more value to the naira. Now let's head to one sector that is feeling the pinch of that drop in the value of the naira. That's the real estate. There's been meetings with cement manufacturers in the country, but they will tell you, well, they are reacting to the current headwinds that's being felt by everyone. They can't be shielded from it, you know. So, but let's delve into the real estate sector now and find out how the headwinds is dealing with them right there and how they're handling it. We have joining us for that the Managing Director and Chief Executive Officer of Wema Board, Mr. Yemi Ejidero. He joins us live here in the studio to share with us what's going on in the real estate. Good morning, Mr. Ejidero. Thank you so much for coming in.
Good morning. Thank you for having me.
Yeah, so we're just talking about the value of naira. I mean, I know we've all felt it. And for you as a CEO, overlooking the running of a major business, Wema Board in this case, obviously you have a lot of import, a lot of interaction with the FX market. Tell us how in recent times this has been affecting your business.
Thank you very much. The fundamentals of the macroeconomic dynamics has significantly affected the real estate and construction industry in particular. Challenges are that some input costs have gone haywire by virtue of the dynamics of the foreign exchange issues that we have in the country. Imagine a contract that was awarded in December at an exchange rate of 1,000 naira but not funded, and then in March, exchange rate had gone over to about 1,560 naira to a US dollar. What that means in essence is that the input costs had significantly increased by virtue of that margin. And so it affects development. Most real estate practitioners have actually taken a back seat, and most people are not even doing any project for now. But we remain very bullish because we are very conscious of the fact that we still have a market to focus on.
And tell me, in reality, you say some real estate practitioners have taken a back seat. Have we seen stalled projects, you know, as a result of this increase in building materials?
Oh, yes, absolutely. A lot of projects have stalled. Most of the projects that are continuing are those that have been funded before now, and that must continue, you know, to run. However, most new projects are not taking place any longer. People are looking at the fundamentals and see whether this deal, if I go into it, is going to remain profitable or not. And that is what is going on at this moment in the market.
I wonder if there's restructuring. I know normally for debts, you know, there's restructuring of debt. Even countries do it. Did they do that in the real estate? Perhaps there was a contract, you know, to get a project on, and then something like this come on. Is it ground enough? Do contracts allow restructuring of the agreement?
All right, so it's important for us to dimension the differences between a commercial real estate and those individuals going into real estate business, just building houses. If you are into commercial real estate, the fundamentals must be very clear. Your input cost, your revenue must match your input cost. And at a time when your input cost has gone haywire, chances are that even if you want to repackage, can you still make the kind of revenue you projected? Because there is a limit to which you can push your selling prices at some point in time. Because if you push it beyond a particular limit, then your product becomes a museum. People will just come and look at it and may not be able to afford it. So whilst there are opportunities to restructure those debt or reprice your contract, it's also important for you to know that can you really sell at some prices that your cost must have pushed you up to. So those are the challenges.
Yeah, but this also presents some opportunities. Like I know in Wema Board, you have 50 billion naira bond issuance for you to raise money, an investment opportunity for another set of Nigerians. Oh,
yes. I mean, this is one of the innovative financing model that Wema Board had entered into. As a matter of strategic intent 2 years ago, we were very clear that the way real estate development is running in this country is not sustainable using bank loans and all that. There is a mismatch between the funds that are available, which are short-term in nature, and real estate investment, which is long-term in nature. So it's clear that we must look at other financing models, and that is why this 50 billion bond becomes very imperative. Of course, it's a long-term financing model that takes us to about 3 to 10 years, medium to long term. And 50 billion is something that you can beat in bite and pieces for you to be able to do a couple of projects in strategic location. For example, a project in Marina, residential luxury real estate project in Marina signifies one of the key elements of what we want to use this 50 billion naira bond for.
So who are you targeting? Who are the investors? Can I participate?
Oh, yes, absolutely. Absolutely. For example, that particular project that I just spoke about is in the heart of Marina. It's a unique product. Residential development in central business district, just like you have them in New York, in London, everywhere, Japan, Tokyo. So central business district also requires residential estate. And it's for folks like you. You walk on Marina, you walk on Broad Street, you walk around the central business district. You want to shorten the commuting time, which is the real thing now because of the high cost of living. People have reduced commuting time. And so if you have your residential apartment in those areas, it's easier for you to go into your offices and come back. So those products are for folks like you, institutional investors, banks, commercial organizations that are operating in central business districts. And of course, we have a couple of others scattered all over Lagos and part of other Nigeria.
Do are Nigerians really looking at such investment opportunities? Although at this time, a lot of people just want to focus on survival and leave investment will take care of itself, in the future. But how has the reaction been? I'm trying to understand Nigerians' perspective too, because people think of investment, they think of, I go to the stock market, and I go to the fixed income market. Yes. Is it really safe to go to the real estate, especially with some of the happenings in recent times? Am I safe?
Absolutely, you are. What we have seen in this market is that with high cost of living, it brings about a new dimension, a new vista of other products that are attractive to other investors. For example, residential luxury real estate market for those people who can afford it. Chances are that in the lower rung of the ladder, people are not interested in buying homes. All they're interested in food, eating. However, there is a particular category of that market that are still interested in investing, especially in the luxury sector, because of the capacity they have to actually invest. And this brings to bear that, look, as a real estate practitioner, you must dimension the market, you must understand what the market is looking at, and that is what we have done in this particular case. And we are quite excited about the interest that has been generated. In fact, at some point in time, we have to stop sales. That tells you that there is still huge demand in some particular market that is probably not in other lower rung of the ladder market.
Talking about the lower rung, a lot of times we hear of affordable houses, and the prices don't sound affordable at all. Absolutely. Especially for that group of people you talked about, people in the lower end. Is there a way we can go around this? I don't know. I mean, the government has been trying. The lawmakers had meeting with cement manufacturers, but the reality is that inflation is right here living with us. Those are the realities. Manufacturing is expensive now. So what else do? They translate it to the commodities. Is there any way of having affordable homes for especially those in the lower part of the ladder?
Truth be told, the affordable home concept had become challenged by virtue of the fundamentals of the macroeconomic dynamics. That is the truth of the matter. Again, there is no affordable cement. There is no affordable reinforcement. Chances are that if we need to pursue the affordable home concept again, there must be a new vista of conversation around technological warehouse and what are the other local construction materials that we must deploy in a bid to be able to provide these affordable homes. And government needs to come in this situation. Affordable homes right at the back of other costs. infrastructural costs that most developers are even unable to recoup. So it's the responsibility of stakeholders working with the government, private practitioners, to be able to put heads together and situate solutions around how we can bring this affordable concept home back to the front burner. But as it is, as of today, it's really, really challenged.
So is there anything that you said government should come in? I mean, we hear governments, they have the mortgage system. I don't know how effective it is, to a lot of people. We hear even they themselves getting involved, in building affordable houses. But I mean, they still have to. What area can they come in to cushion some of this effect?
Okay, so why we are not averse to government, taking position in affordable home production, we still believe that government can use its wherewithal to provide major infrastructure, which represent major cost inputs into production of those homes. Imagine if you have roads, water, electricity in locations that you can recoup the infrastructural development charges from prospective developers. That will help reduce the cost of producing those homes. And it gives the property developers, opportunity to be able to spread the repayment on those infrastructural development charges over a long period of time, which is necessarily not going to impact negatively the initial purchase cost. So I believe that government has a lot of responsibilities in providing those infrastructural facilities that will help drive down the cost of producing those homes.
All right, sir. Thank you so much for your time.
Thank you for having me.
And sharing your perspective. Really appreciate your time. Taking time off from your very busy schedule.
Thank you. Thank you for having me.
Yes, Managing Director and Chief Executive Officer of Wema Board, Mr. Yemi Ejidiro. Thank you.
Thank you. Thank you for having me.
All right, so now let's head to the market and see how that closed. I must tell you that the NGX is, well, they look so good yesterday, or do we say it didn't look so good, or just look normal? Normal thing is there will be profits, there will be bargain hunting, there will be cherry picking, and then there will be profit taking. So profit taking is what happened yesterday at the NGX. Let's look at the numbers. At this time, we saw that the NGX was down at the close of trade. If we could have those numbers on the board, that would be really, really nice. The NGX dropped yesterday by 0.11%. Thank you so much. But we're still hanging on to our 104,000. So it's 104,553.31. And we're still on 59 trillion naira after losing just 62.21. I mean, we've gained a whole lot more than this. We've gained more than 200 billion. So we can make do with this, with this drop right here. When we look at the activity board, we see that the volume was green, but value, which was the star yesterday or 2 days ago, dropped 29.69% to close at 7.59 billion naira. Deals about 9,500 after gaining about 5.20%. The sectors, the banking not shining as much, but it gained at the close of trade more than 1%. Consumer goods 0.16%. Industrial 0.12%, insurance sustaining the bullish recovery that it has found. Oil and gas still marginally up right there, 0.04%. And the top trades yesterday, FBNH, UBN, Accessco, the Fugas are doing their thing again for a second day. Maybe today we'll see Zen Bank also right there, considering that we have a first female CEO or group managing director over that institution. Now let's look at the unlisted market. Unlisted market is recovering. We see a slight gain, not slight, more than 1%. That's not slight. 1.04% at 1,064. Market cap right there at 1.44 trillion naira. Activity chart for the unlisted markets yesterday was the volume was green, value in red, deals in green. In fact, value was up more than 57%. There you have it right there. And then we saw deals 22 and stocks traded 10 stocks traded yesterday. That's for the unlisted market. We had some changes coming right there. I hope it to be a positive one, but we'll keep our ears close to the ground and report them to you. Let's head to the fixed income market now. There was an auction on Monday. We hope to get the results from our analyst. But let's see the numbers at the close of trade. 50 deals yesterday, worth 83.01 trillion naira. We can see a lot of activity right there in the February 2034 deals. That's for the bonds. The Treasury, I think we'll see more on the short security. 21st of February 2034 had a lot of activity. 26 we see their deals at the close of trade worth 83.01 trillion naira. Look at the Treasury bills, the interesting one these days. This is where the foreign investors seem to be showing more confidence, even though the secondary traded relatively low, but had 21 deals at the close of trade. There you have the March 2025, and the worth was 18.89 billion. A bit of a calm right there after that auction on Monday. And OMO, that's the open market, had 16 deals worth 77.60. And then we had a February 25th, 2025 security with 10 deals yesterday. Let's talk to James Adisa. James Adisa is a fixed income dealer with Chapel Hill Denham. Hi, James. Good morning.
Good morning. Thank you for having me on the show.
Yeah, so we see that the secondary market's a bit calm, but let's start from the auction. The auction on Monday, what's the result? What was the reaction to the market or to that auction?
Okay, so at the fixed income market, in the primary market in specific, the DMO on behalf of the federal government came out to raise 450 billion naira. We saw total subscription sit at around 615 billion. So the auction was oversubscribed by about 158 billion. And that translated to a bid to offer ratio of around 1.4 times. And what we saw was that, most of the three instruments that were issued, one was a new instrument and the other two were reopening. And at the 10-year bond, we saw the yield cross uncharted territories. For the first time, we saw yield go over 20%, and that's quite interesting. I think that's really where the insight is, because investors are now looking at the 10-year bond and saying that I can buy a 10-year bond at 20%, above 20% actually, lock that in for 10 years, as opposed to buying treasury bills at around 27% effectively, which can be refinanced in a year and at a lower rate. So we saw a significant amount of the demand being skewed towards the 10-year bond. And that was really how the auction played out.
That's different from what we've been having, because we've been seeing the shorter securities more attractive, especially to the foreign investors. But how much of foreign participation did we get this time around?
And so for the bond auction, there was really no clarity on whether foreign investors or domestic investors dominated the demand that we saw at the auction. Right? So it's not really clear whether foreign investors, were really the drivers or were aggressive in buying the longer dated instruments. But one thing is clear, the marginal rate which they issued the 10-year bond at is clearly attractive to investors.
And now, of course, the higher it gets, or the closer it gets to the inflation rate, the more attractive. But this gap is wider now. We have inflation at over 31%. So, 20, we're celebrating because we're doing 20-something before. But now the gap is wider. But it looks like this is not deterring investor sentiment.
Yeah, so, foreign investors would probably prefer to stay at the short end of the curve, like you mentioned, and with inflation at around 31.7%, effective yield on Treasury and OMO bills at around 27%. Really, the gap has narrowed. And one thing is clear: the CBN is really in this game of mopping up excess liquidity, keeping interest rates high, and expectations for the Monetary Policy Committee meeting is that there will be a further increase in interest rates, key policy rates in specific. And if that happens, we'll see a repricing in Treasury bill yields, and we'll further see the gap between the MPR and the Treasury bills or the money market instruments narrow. So I think that if they continue to attract this or offer this attractive rate, we'll still see positive sentiment in fixed income markets, and we'll still see a lot of investors being attracted to the fixed income market over other markets. But there are still opportunities that abound in other markets. Nevertheless, we still think that yield would possibly trend higher.
So, I mean, it looks like the CBN is getting the results, or at least on the path of getting the result that it's looking for. That is mopping up some of those money supply. What do you expect, or what have you been hearing about expectations as the MPC sits again next week, Monday and Tuesday? Do you see more rate hike? How does this feed into the market?
I mean, market expectations, right, are that the CBN will remain hawkish. We see that they are definitely going to offer more attractive rates because they are in the game for two reasons: one, to attract foreign investors, and two, to move up excess liquidity. And our expectations are that they will do somewhere around 200 basis points, possibly at the next monetary policy meeting.
All right, thank you so much. Oh, just before we let you go, what's the expectation for the rest of the week? Trading quiet?
System liquidity is tight. They've really been mopping up this excess liquidity. Bank balances are tight, and we expect to see this filter into the market. With investors investors offering little amount of money or having little amount of money to come to the market to play, we would expect to see them bid for higher yields in the fixed income market. And so we might still see yields possibly trend higher, right? But overall, given that system liquidity is tight, markets will possibly remain quiet.
All right. Thank you so much, James Adisa, a fixed income dealer with Chapel Hill Denham. All right, so that's it on this side of the show. We now go back to Sunrise Daily for more strong and current conversations they always have for you.